Great. So this is the crypto panel. And there are some ground rules that we're going to try and follow. The first one is don't ask about the Bitcoin price. The second one is don't ask about the Bitcoin price. I was supposed to say it 3 times, right? Don't ask about the Bitcoin price. I'm sure somebody will ask about the Bitcoin price. But let's introduce the panel. Starting from the end, we have, well, why don't you guys introduce yourselves?
Good evening. I'm Joe Rabin, and although I'm on the old side and sitting on the extreme right end from my perspective, you should not infer anything political from that at all. I'm a practicing CTO, and I usually ask the question, why is this good for my application? What makes it suitable? And I think blockchain is one of those things that those questions are aptly asked of.
Okay, so I'm Eddie George, and I'm the founder and CEO of NewFinance, which is a very large finance and technology network. My background is computer science, MBA, so working in the city for about 30 years. And I'm very similar in that I'm a pragmatist, and if you want me to use this architectural component in some system, I want to know what the benefits are and why I would do it and so on and so forth. And I don't happen to think it's going to change the world, but I think it's probably a useful component in the toolbox of a system architect.
My name is James Clark. I'm the head of Tech and Life Sciences at London Stock Exchange, and I'm proud to join this panel, or is it a barbershop choir? I think probably a bit more appropriate for if you need a barber. So my job at the Stock Exchange is I work with companies to help them raise capital on the public markets. I specialise with tech and life science companies. So if you're a tech company looking to raise money on the markets, you come through me. Therefore, I take a really big interest in things like crypto, which are another way that companies can raise capital as they grow through their life cycle.
Hi, I'm Raj Gupta. I'm an ex-banker and an advisor to blockchain companies. That's about it.
We already know me. I'm Raoul Lum. I'm a technology lawyer. I do nothing but advise technology companies either on their IP or raising money, or people who want to invest in companies on whether those companies own any IP or not, and whether they should or shouldn't put their money into them.
Yeah, it's the same as Raoul. I guess you know me now. I'm Michael, researcher at Cambridge Centre for Alternative Finance, which is a research center at the University of Cambridge.
My name's Alistair. You've seen me already as well. I guess in this context, I've just joined UCL Centre for Blockchain Technologies. Not really a blockchain or crypto background, mostly machine learning and AI, but I've got a couple of projects, so we'll see how they pan out.
Okay, good. I think it's always useful to go back to the beginning on these kind of things. And if you read the abstract of Bitcoin, it starts out a purely peer-to-peer version of electronic cash, which would allow online payments to be sent directly from one party to another without going through a financial institution. So the first question I will ask is, will blockchains begin replacing financial institutions? And for that, I think we should start with James.
Well, having had this question at most crypto panels I've done, I think that they'll probably end up as an integral part of the financial markets. I mean, look, the Australian Stock Exchange has just launched a Bitcoin-based registration and clearing aspect of their business. We've done, at the Stock Exchange, have done pilots using the same sorts of technology for the same sorts of purposes. I think that it's pretty inevitable that if you're looking to find a way to create the immutability of a blockchain, plus the low-cost aspect of sort of basically allowing you to make it a bit more networked, it's obviously a very attractive thing. However, the thing to bear in mind about exchanges is the aspect of trust. I'm going to talk about Bitcoin here. We saw last week when Bitcoin price is going fucking ballistic, Coinbase couldn't deal with the volume of transactions it was trying to cope with, and it crashed. So it doesn't matter how high the price is going. If you wanted to exit at that point, you kind of had to hold on for the ride and hope you topped out at a pretty good place. So the primary aspect of any kind of exchange is to remain open so traders can trade regardless of the load of transactions passing through the network. To give you some idea of how that works in the real world, the stock exchange did a lot of load testing leading up to the Brexit vote, knowing that the day after the Brexit vote we would have incredibly high volumes of trading, as it turned out. We had our record high volume day of trading, but we had load tested to be able to transact 1 billion transactions a day. Right? So that's the sort of volume you need to be able to manage if you have proper sized financial markets. And one of the challenges that blockchain and a lot of aspects of crypto faces is how can you make sure you're operational and trading? And one of the ways you're able to do that is to have a centralized exchange which can afford to make the capital investment required to manage this kind of flow. So personally, I don't think this is going to disappear us. I think it's going to be something that we have to incorporate because it becomes something that's applicable to our customers.
And since you mentioned Bitcoin, we now have to go away from Bitcoin because you mentioned it. So let's go to Joe. And can you fill us in on non-crypto uses of the blockchain?
I find this quite hard, actually. When people do say to me, well, you're a CTO, what would you recommend people use it for? And I say, well, if you're struggling to raise money and you can put a blockchain slant on your product, then you might get a better valuation, and you might indeed get an easier investment. And if you can do that, then that's an incredibly useful thing that blockchain has done for you. I don't want to appear too cynical in saying that, but a lot of people will perhaps think, oh yes, I can put a blockchain spin on it. I would say that you probably need to have a justifiable reason behind it, or semi, but apart from that, I have not come across anybody coming to me saying, look, blockchain is cheaper, faster, or better in a functional sense or in a non-functional sense for any particular application that I've ever been presented with. I'm sorry to say. I would love to hear about it.
Does anybody on the panel have an example of non-cryptographic blockchain products from the pro side?
So yeah, I guess they asked me to join the Blockchain Technology Center to start working on non-financial related applications. So we've got a few, but one is at a sort of slightly later stage of gestation with a fairly large drinks company looking at supply chain related applications. So if you can distribute across your supply chain a set of ways of measuring what is happening on the supply chain, and you can control it through your blockchain, there are potentially some ways that are interesting in terms of moderating both the cash flows through that supply chain in one direction in the way that perhaps the sort of financial applications you already conceive work, but also metadata associated with the devices or the machines across that again is then basically on a distributed ledger and is accessible for different sorts of process alignment and or measurement over that supply chain.
I mean, is that just a shortcoming of existing systems, or are we looking at a revolution only enabled by blockchain software?
I think that the logistics stuff can be done in other ways. I think the way it interfaces with other financial products along that route means that there are potentially some savings or benefits or ways to integrate into other financial audit. But a straightforward database type application in principle can collect the information in other ways. It comes back to trust and fabricating trust. I mentioned another one. So post Grenfell tower disaster, we've got one sort of construction company looking at applications for keeping the building records in a public ledger of some description. It's suggested, obviously the inquiry is ongoing, it's suggested that some of the paper trail behind checks and the databases behind those checks being completed are missing. And therefore you could imagine that some sort of blockchain technology, which is much, much harder to then go back and lose or alter, has some advantages.
Okay, moving to the neutral party here.
Well, it's just one thing. You asked for a good example. So timestamping using, and we're back again at Bitcoin, using the Bitcoin blockchain as a public notary has been a non-monetary use case for like the last 7-8 years. So basically you use the blockchain as a public notary for timestamping data. It can be any kind of data. It gives you proof of existence, so that something existed prior to a certain point in time, and it gives you proof of integrity, so it hasn't been changed. And you actually don't need to have your own blockchain for that, but just using an existing blockchain where you can like just batch it with other records as well, makes it easier, more secure, and cheaper.
Can you give me the example of a product or a service currently being offered?
Sure. Well, there are companies that are using that. So they're building platforms where you can basically timestamp automatically anything you want, like emails, whatever, or like the entire workflow, and it gets periodically anchored, as the technical term, to the public chain. Usually it's Bitcoin and Ethereum public chains where it gets anchored on Yeah, more or less periodically. So you can just specify the time frame you want to have.
And once again, going back to my briefing, which is we're talking about blockchain without crypto. Would it be possible to do this without the currencies attached? So in other words, could you just use the technology?
Sure, you could, because it's just a record-keeping system then. But the thing is, you don't get the exact... So then we're back to the trade-offs. You don't get exactly the same characteristics that a public blockchain with the cryptocurrency would do. And it's all because the cryptocurrency really is a fundamental part of securing the entire chain. And so if you keep that away, you need to secure it somewhere differently. And that's where these entirely legal off-chain contracts and access controls come into play. So you can still use it for that, but it doesn't give you the exact same security and trust models.
Okay.
So,
coming back to the neutral party, we're hearing a lot about trust, and we're hearing a lot about trust between parties. What advantage do you see as a completely neutral party to a system that's open, as the gentlemen on the I guess your left are representing, versus a system that's private, as James is talking about?
Sure, well, you've hit the nail on the head already, which is the way-off between transparency and privacy. And transparency is in everyone who isn't part of the transaction's interest, and privacy is, of course, in the interest of everyone who is a party to it. And what you've got to ask yourself, I suppose, when you're looking at the applications of the technology are, which one do I prefer here, and to what degree do I prefer each one here? Because I know that when I go buy stuff down the shops, I might be incredibly embarrassed about that. Not because I'm buying anything illegal, but because my taste in music is terrible. So when I buy records, I don't necessarily want the rest of the world to know about that and to be able to see those transactions. On the other hand, the rest of you might have a sincere interest in my transactions. If, for example, I am not, in fact, going out to the record shop and buying dreadful CDs of Creedence Clearwater Revival, but am instead off soliciting young ladies of the night, and you think my wife should know about it. You might think that's in your interest to know. I might think it's not. It's the obvious trade-off of any system of transaction. How much do we favour those who want to look in, and how much do we favour those that are actually doing the transactions?
Great. And then I'd like to come to Eddie. And Eddie, if you could take the other role, and could you tell me one great thing about the blockchain? What does it do very well, from your view?
Can I just say Creedence Clearwater Revival are a really good band? You know, Proud Mary, you know, Fortunate Son, you've all heard those songs. Anyway, so what do I think is a really good thing about it? I think the best thing about the whole Satoshi Bitcoin thing and the blockchain thing is it's really, really driven. I think there's a lot of hype, but I think it's really driven in the last 5 years an incredible amount of attention into fintech. I think it's all, you know, I think it's driven regulators to come in. I can remember when we started in 2011, you know, the government had never even mentioned the term, you know, Bitcoin or anything like that. I think it's that kind of thing. It's very hard for me to give you a architectural reason. I think there are niche use cases. Some have been examined.
No, Joe has told us there are no technical reasons that the blockchain is advantageous for any business other than fleecing people online.
Well,
but
I don't...
No, but I mean, beyond the architecture, you're talking about it's forcing an issue, what, of a discussion of regulation?
It started discussion. The regulators weren't even in this space. You know, 5 years ago, the regulators didn't... So in 2012, the UK government didn't even support the financial technology scene in Tech City because they were so pissed off with the banks after 2008. That they turned the light on sort of in 2013 and suddenly got behind it. So you now see, you're talking about the Singapore regulator who was at every regulator now has a sandbox in Bitcoin and blockchain, blah, blah. They all do. 5 years ago, they had nothing. They didn't even recognize any of this stuff that we're talking about today. So I think that's strong. If you're talking about blockchain as being, the savior of the world, and, if you cut yourself, you rub blockchain on it and it'll cure all this kind of stuff. I'm sitting here listening to this, I'm thinking, this is a bit desperate. Nobody can actually, it's a bit, Emperor's New Clothes. Nobody knows what we can really use it for. I'm not sure if that's completely true, but I'm not sure it's a universal application that everybody seems to think it is. But I think there will be niche cases. You talk about time stamping, that's good. Yeah, that works. But it's not everything. It's not every component. It's a distributed database. We already have those. We already have those. We've had those for 30 or 40 years. And they're much more performant than a bunch of blocks in a file system. They're much more performant and cheaper and much more advanced, and have a whole, huge organization behind them with a whole bunch of tools that allow you to produce highly available systems and all the rest of it. So this blockchain of blocks in a sort of ledger in a file system, relatively cumbersome, is going to struggle to compete with those larger players and those larger bits of architecture.
So your favorite thing about the blockchain is that it's forcing attention and regulation to fintech at large. So are we looking at a $400 billion straw man?
It's not a straw man. I mean, I don't want to be too rude about it, but it's more like a cargo cult. That's really rude, isn't it? It's more like a cargo cult. I mean, it's got the discussion going, as have all these things, and like I say, you go back 6 years, this didn't happen. There wasn't a global movement towards looking at how we can transform financial services using digital, which is what's happening. So this is what happened to media. The media, new media, now you've got this totally digital media. You've got finance, you've got NewFinance. I don't mean my group, I mean this whole Finance 2.0 thing. It's part of the discussion, but I suspect when the dust settles in 10 or 20 years, we won't all have one great big huge blockchain doing everything. It may be a very niche product.
So you're saying it's a $400 billion conversation?
Yeah. I'm struggling. I'm struggling to give you the really good, good example.
I think I have a similar perspective, only from a technology point of view. So cast your mind back to when SQL ruled the world and everybody used relational databases. And then suddenly, guess what? NoSQL came along and everybody said, oh God, NoSQL's the answer. Man, why are we all using this crafty? Oh, well, because it's got transactional integrity, because it does replication. Oh, I see why we're still using that now. And I think it's good that we get people coming along and say, well, you should be using blockchain. Why aren't you using blockchain? Well, kind of, because it doesn't have the same properties, the same discussion really in many ways as we had back in the flip over from people saying, got to use NoSQL from SQL. We're having the same discussion again. It's good to re-examine the technology perspective from which you approach things. It's good to challenge what are your assumptions about your underlying technology. Is it appropriate for what you're doing? Are there different ways of doing things? And just like NoSQL and SQL now live together in, relatively speaking, harmonious kind of way, I expect blockchain uses will emerge where we say, yeah, that's a good, sensible use for it. Yeah, another arrow in our quiver that we can use. So yeah, it's good from that point of view.
But you don't think it's the first step of the revolution?
No, I'm not familiar with that ever happening, actually.
Okay. Coming over to the pro side, I would like to know if we live in a world where Joe's wrong and the world is dominated by Bitcoin and blockchain, what are the really bad things that could happen?
I'll come back to that because we're recording, so let me just mentally censor myself. I'm just going to pick up on Joe's point, though. I think this just comes back to the point that was reiterated before, the integrity of a ledger. And if the internet is the first layer in terms of the plumbing, and the web from the 90s onwards is the sort of second layer in terms of linking information on it, there are all sorts of properties of that information on the web layer that don't have the sorts of things we would like to do for some real-world applications. Right? So that trust layer, or a layer where the information isn't infinitely replicable, isn't corruptible, isn't as open to certain types of attacks, is of interest. And I think you will end up with a blended mesh of public, private, blockchains, networks, web infrastructures, etc. And you're just seeing the emergence of a set of protocols that, for those applications as they emerge, is an enabling layer. In terms of ways that it could be abused, I think probably pick up on a gentleman's point about China cracking down on it. One way that you could game nation states and nation states' ability to produce and control their own currencies is off a blockchain-related currency, Bitcoin or otherwise. And you could imagine one or two very powerful totalitarian governments that control in their internal market can highly control the supply, use that as a weapon against other smaller states. So weaponizing of blockchain,
weaponized blockchain,
I think, will emerge in over the next few decades. Just as we've seen weaponization of social media, you will get weaponization of these sorts of things.
Yes, I completely agree with your point that blockchain, if we talk about distributed ledger technology, it's really a vehicle for change within institutions. So it gets people to rethink the entire business processes. And in the end, they may not end up, or in most cases, they don't end up with something we would call a blockchain now, but the blockchain, that entire idea, has driven them actually to reconsider all that stuff and actually transform their entire infrastructure, and more importantly, business processes. So it's not about really removing intermediaries, but it's more about like disintermediating these antiquated business processes. Then on the other hand, you have these public blockchain. That's why I really want to always make the distinction between the two, because this is a completely different thing, where you need to have a token to create a completely different. It's more about social systems actually than it's about technology. The blockchain itself in a public system is really just one data structure, which is there. It's very inefficient, but it's inefficient by design because it fulfills one specific function. And so in permission blockchains, we don't need that censorship resistance, so there needs to be something different and we get out of it. I would say maybe it's using cryptographic primitives so that every single participant is able to independently verify what's happening. That's what I see as main, what's most interesting. But honestly, I'm not sure whether you would need to keep that data structure then and can just like use another infrastructure with the same cryptographic primitives. So that's something.
Do you think we'll see the weaponized blockchain?
Not so sure about this, but
James.
well, it depends how you define weapon.
James and then Eddie.
Yeah, I think because you mentioned sort of China cracking down on crypto, I think it's important to understand the regulatory environment that exists in China. One of the things they've done in recent years is they've really cracked down on external capital flows from China. So one of the great things about crypto is it allows you to transfer money out of one place and into another place without it really being detected. And from China's point of view, if they're cracking down on all sorts of other capital outflows, then crypto just becomes a natural part of that sort of collection of blockages. Their concern is, money flows out of China, it flows into other markets, and sort of that's one of their primary concerns. It's not so much that we hate crypto, it's more like we just hate another way that money can be transferred out of China, and it has all other aspects of corruption and all the other things that they have to focus on from a social and regulatory point of view.
Just on that point, so what about the fact that I've been told China controls 75% of the mining?
That's what cheap energy prices will do for you.
But how do you rationalize that with them blocking the use of it?
Well, from their point of view, as I say, the problem for them is not that they have currency being earned in that country, it's that currency is being transferred out of that country that they're trying to actually block. So from their perspective, as far as I can tell, it's quite, it's consistent. They don't have a problem with Bitcoin, they don't have a problem with crypto, they just have a problem with people transferring currency out of China.
And I think it's also worth saying with China, the regulation that they were cracking down on was the use of A, capital flight out of the country, and B, the idea of ICOs in general. So what they really hated the idea of was people's ability to put money into companies in huge quantities without the oversight of Chinese regulators, because how on earth then would you be able to regulate which companies were allowed to raise money at all, which might seem like the complete antithesis of what raising money for companies is supposed to be about. But in China, in that regulatory environment, makes rather more sense. The idea that they can use cheap electricity prices in China to create an asset and sell it, which results in a capital flow into China, of no concern at all.
Okay, this is interesting. Let's take
just
Eddie's,
quickly, one more thing.
Eddie's point.
One more quickly, in relation to China in that sort of way. Again, the fintech environment in China is quite interesting because they've had massive amounts of scams in the peer-to-peer market. There's been a huge crackdown there as well. So again, it's consistent from their point of view of trying to protect consumers from getting ripped off.
So they've had a lot of issues. Just bouncing back to Michael's point, there's a thing called Y2K. I don't know if you remember it. It's about 17 years ago, and I was at Citi at the time, and it kind of reminds me of blockchain because when we ticked over on the midnight, no planes fell out of the sky. Actually, nothing happened. Not a single light bulb burst. It was a complete non-event. However, in the run-up to that, in the name of Y2K, we all spent trillions replacing our systems in banks because it then became the thing we had to do, and you just had to say Y2K, and you would get £100,000 to buy a server and all this kind of stuff. Seriously. So blockchain's a bit like that. So if you take all the banks today, they've all got lots of proprietary systems. And if you take out all that proprietariness and standardize it and rationalize it, you will indeed save billions or trillions. There's no question about that. You don't necessarily need a blockchain to do it, but that's kind of the the thing people are hanging this on. They're saying, oh, so digital asset holdings can use blockchain to rationalize. If you rationalized it with Oracle, you would save trillions. It doesn't really matter. As long as you take out that level of proprietariness that banks have and have always had, you will save a lot of money. So blockchain's a bit like a catalyst where it remains unchanged at the end of the reaction, but the reaction has taken place. And so I think that's probably one of its greatest values.
I just want to say I worked on a Y2K project, and the threat was real. Raj.
Yeah, in fact, banks are not really interested in blockchain at all. What they're really interested in are the smart contracts that actually can be written on it. And that's basically what's being used to settle OTC contracts and stuff like that, with the aid of third-party extrusions into the system, which are called oracles for some reason. Like, for example, you have a swap contract, which involves the exchange of cash flows between two parties. But on what basis do you settle the swap contracts? There's no way within the blockchain to find an independent source which would provide the verification of a price. And for that reason, you need to plug into something like Bloomberg or Reuters, effectively to get the price on basis of which to settle the swap contract. And that's all banks are really interested in, smart contracts, not really the blockchain.
Just coming back to a point. So you said that one of the reasons China was cracking down on ICOs, and I'm going to say token sales. One of the reasons China was cracking down on token sales was because they were putting money into unregulated businesses that they couldn't keep track of. But how is that any different from VC?
I know, I'll tell you, look, I'm no expert in Chinese capital markets or private
I'm just saying that conceptually in general,
Yep.
how is an ICO any different from a venture capitalist?
From venture capital, and the answer is simply because wealth really can be a qualification in financial services, and the VC has gone out and got himself a license from the FCA, and a long time ago, financial services regulators swore that never again would they let people sell tulip bulbs directly to the general public. Oh no, we had to go through a middleman who was smart enough to spot that he could make a load of money out of tulip bulbs even if we didn't. So the simple answer is, what's the difference? Well, they haven't gone through a regulated middleman with the oversight of the government.
I think a better analogy is probably the equity crowdfunding market. So it's equivalently early stage. It's equivalently lack of any real track record to be able to talk about. The big difference is the equity crowdfunding worked very hard right from the start to build a regulatory framework that they could be part of the way the FCA operates. And it's quite important to bear in mind that the FCA is a very permissive regulator and usually likes to have a community develop guidelines and best practices that they can then craft into a regulatory structure. And for the record, one of the things that the stock exchange has tried to do is to speak to the crypto community to get them to follow the same path, because from our perspective, we think crypto is very exciting, provided it has a regulatory framework that gives some protection to investors, because ultimately an exchange is just a place where two parties can come and make a deal with the requisite amount of infrastructure around regulation to allow that, the risk to be absorbed relatively easily by the investor, and for the issuer to be able to raise the money. So I think equity crowdfunding is probably a better model, but they sought the regulation out actively to legitimize what they were trying to do, realizing that regulation brings trust and trust brings in more capital.
I've heard that point before, and now that I've completed Nikhil's list, I'd like to get a little more challenging here, which is, I'm hearing a lot that says it's about regulation, and regulation is good, and I think in a lot of ways it is. I mean, anybody who's done an MBA, they teach you that it's very good, and you believe it, and that seems right. However, I would also like to talk about the timing of this, which is the Satoshi paper, which came out in 2008, which was the same time that people were sitting on the steps of St. Paul's outside the stock exchange, and also outside the New York Stock Exchange, to which I think it was one of the first protests in U.S. history where they protested at Wall Street, and the answer was, well, you don't protest in Washington because there's no power in Washington. And the people, wherever the people are going to protest, that is the seat of the power. So this paper comes out in 2008, and now we are in an age that some of us may say is governance in challenge. If you're an American Democrat, you might say crisis. But is there any feeling about, so you're all saying regulation is good. You're saying, Joe basically says, if you can't raise money any other way, then you can do this. Eddie's point is that actually what this did was start a larger $400 billion conversation, which is a lot. James's point is that actually there's frameworks that are all set up, and as long as you participate in those frameworks, the outcome is better for everybody. Raj's point is basically banks don't give a shit, and they're only interested in like accelerating high-frequency trading even faster. And then the neutral party is in the middle telling us he doesn't know anything about Chinese VC policy. It's very quiet on the pro side, but I would be interested in any comments about the social timing of this, which is you had 2008, and we all know how many bankers went to jail. I think there was one in Iceland. You then have a period where the financial system, I mean, if you want to look at the largest manipulator of it, you could say it's been the central banks through quantitative easing. And furthermore, you now have the emergence of a decentralized financial technology, which apparently is even unstoppable by the Chinese, which seems quite difficult given the amount of control they have over their networks. Apparently the ban didn't really work. So I would be very interested to hear any short comments, long comments, perhaps even dissertations on what is the social meaning of blockchain.
So the Satoshi paper is the end of about a 30-year discussion. I mean, it didn't just come out of the blue. That discussion had been going on for a long time. And I have earlier papers from about 30 years before.
Okay,
then.
so why then?
So well, I don't know, but what I could tell you is there were previous groups who'd got together, and eventually it used bits of other ideas and so on. It eventually came together in Bitcoin, where they finally got it all together to solve this peer-to-peer cash problem. If there's a timing there, I kind of feel it's random, but it looks like.
But okay, by that point, sorry. By that point, what Joe says is that there are technologies and you need use cases. So if you're saying the technology had been around for 30 years, what was the use case that occurred first? And the Silk Road is an obvious one. But what is the use case that occurred that is now propelling it to double every 2 weeks?
I'm not sure, but the discussion on, if you go back before that paper, there are a whole group of people, several groups of people who'd got together to try and solve the issue of electronic cash in a peer-to-peer decentralized distributed network. And there are lots of protocols that were tried out that came together to form that in 2008. I'm not sure if it was cleverly timed. It may have just been it may have just been opportune. I don't know, but there is a lot of work behind that. It didn't just come out. Satoshi didn't come out of nowhere, so it may be random. But I don't know if you have.
I think what could also be at play here is a bit of confirmation bias and a bit of survivor bias. So the confirmation bias being, what happened in 2008? What else happened in 2008? There's an interesting coincidence. I'll make two connections that don't completely exist. It's not necessarily causal. The second part of it is a survivor bias of. One thing that frustrates me a great deal, as anyone who's followed me on Twitter will know, is that there is the assumption that because Bitcoin has just exploded, that somehow it is the best solution, and also the people who backed it in early days are geniuses. And in many cases, it's you bought the right magic beans at the right time, that everyone collectively at some point went, well, this seems to be working. And the mechanism we see now is that the rest of the schmoes like me have started to pay attention to the magic beans and thought, I can get me some of that action as well. And so you have people piling into a market that are pushing up the price, and it's now looking a little bit pyramid-like.
But to that point, if that were true, I wouldn't expect to hear the ideology that I've heard. So I've been to 5 countries, and I've heard 5 people independently from different nations talking about Bitcoin and Ethereum. And they're very attached to the ideology that comes with it. And I'd wondered where this was coming from. And then when we were at Slush, we went to a blockchain talk, and I saw the man who was espousing it. But one of the men. What I find interesting, so you say that, the confirmation survival bias, is I take those points. However, is what we're watching simply a get-rich-quick scheme? Is it just the money? Or is it that the price is rising so quickly, people think it is confirming the ideology? Or is there a giant social purpose unmet by the needs of the current financial system, or even worse, constricted by it, that we're seeing people fill? So I guess fundamentally behind this question, is this the emperor's new clothes? Is this just a technology bubble? Is this something that's happening right now? Or is there something deeper going on here that it's representing? And it may not be the final technology, but are people crying out for a decentralized, unregulated financial system?
Well, clearly they are. But I mean, to go back to the ideology point and saying what is it that it represents, I think confirmation bias is an interesting point, because it's worth saying, well, look, 2008 is when we had the Satoshi paper, and I'm going to connect that up to 2008, which is Occupy Wall Street. Clearly, what this means is there's some crying out for an unregulated financial system, which is outside the realm of these crooks. But at the same time, you might say, well, no, hang on, the real data points to link up the fact that the price of this stuff has boomed in 2016 and 2017, which were the years of populism. And you might say the great unwashed having a say in things and being allowed to have an effect on things, they had absolutely no business having any effect or say, and taking terrible decisions that might be awful for everybody. And the point I'm making really is that you don't know what the ideology is behind something until it really explodes in your face. And so when we say, is it the emperor's new clothes, is it not the emperor's new clothes, I don't even think we know what colour those clothes are supposed to be at the moment, because we all project the ideology I think we want to see in crypto communities onto it. We all assume that the people we mix with, when we talk to our breed of evangelists saying this is what crypto represents, this is what blockchain represents, it will be a deregulating of financial services spaces. Well, hang on, go over to R3 and talk to technologists at the big banks, and they say, no, crypto is not a deregulating and not a taking away of our space. No, this is an excellent way for us to cut out our middlemen and increase our profits ever further. So I think be wary of trying to project any kind of ideology onto blockchain technology, because one can only ever project your own.
Oh, I'm not projecting it. I'm hearing it. I'm neutral as well, but I'm hearing it. And when you see Vitalik from Ethereum talking about how certain projects don't match the ethos of the crypto community. I mean, I'm not sitting here in front of you making up an ideology. If you go talk to people, you will find it and you will hear it. And I think the populism point is interesting, which is, and maybe this is the point you're jumping up to address, which is there a social purpose it's serving?
Well, I fully agree with your point. It doesn't really matter what you project in it, because if you talk to people, what is Bitcoin, you would get from four people, you would get four completely different answers. And it's just like Bitcoin itself doesn't care because it's neutral. It's just like as long as you follow the validity rules, you can just use it whatever you want it for. So that's the thing. And that's also why we have this entire war about, is it now digital cash, is it digital gold or whatever? It's just like the system itself doesn't care. It really depends, again, on your specific situation, what you see in it. The same, in my opinion, would also apply to these permission blockchains, but because they are by nature restricted to a closed set of participants, I guess they share, well, rather share the same ideology than a completely decentralized system where it's permissionless in the sense that everybody can just join or leave at will. So,
add something quick. I'm probably not the best person to speak on to social issues or commentary. I think my first company is Italia, optimization company, and we are exploring ways of using a ledger for distributing essentially proof of work by employees. And so there has been some discussion about distributed autonomous organizations and a ledger as a technology between actors that might not agree or trust a whole set of rules around, a database and protection under common law. I think there are ways of wedding yourself to a technology that, that as a technology, it's just built on top of the internet, right? You could have done it 50 years ago plus. What you're seeing is the prevalence and the commodification of computing, in the sense that people have devices they carry around where they can store wealth or value as an asset in a digital setting. And, the Satoshi's paper is the first sort of solution to Byzantine general problem, i.e., actors within a network can't come up with a malicious program to supersede how the network works. So, it's a technical solution to an ancient problem about how to control networks. And you will see, humans organize their productive utility in networks, and you will see all sorts of applications that might have social consequences by virtue of people believing in this type of technology as a mechanism for delivering, what on one hand is transparency in a public sense, and is also, one of the complaints for Bitcoin when it comes to regulation is the address side of it being private, right? And I think a lot of the money going into the system at this, which I still believe is an incredibly early stage, is potentially not completely legal. So I think the regulatory framework that sits around it is interesting, but I think there is something intrinsic to people's perception of the technology about where you put trust and where you put ways of audit of things that have gone on, I think is slightly different and potentially will change things going forward.
Can I just say I do think you are partially right, or you're onto something, because although I think the 2008 was a bit random, remember when Bitcoin came out, and I know we're not allowed to talk about Bitcoin, it was free. It provided instant point-to-point free transfers at that time. Now you have to pay. So it did capture people's imagination who looked for a sort of better financial system. And there's a lot of dissent in financial systems towards banks and all the rest of it because of scandals and so on and so forth, and the crash in 2008. So I do think it captured people's imagination, because at that point you had something a bit like email to letters, point-to-point free transfers as opposed to putting a stamp on a letter, and you could do point-to-point free. I've done free Bitcoin transfers in the early days before the system, and as Michael said, as you started to ramp up and you had to pay the price for that scaling. But in the early days it was very promising, and I think it did capture a lot of people's imagination who thought, oh well, here we go, here's a new thing, it's going to be free, no more percentages, I'm running a business, I won't have to pay to collect card payments and all the rest of it. So I think it did capture people's imagination. I'm not sure if the timing was intentional and Satoshi was some mad genius somewhere, but I do think that's possible.
Yeah, I think it's also interesting to think about, well, firstly, who that community was, and secondly, how do you define adoption? So, firstly, yeah, there was a community of people who were fascinated in this from a level of sort of an anarchist community, there were sort of aspects of, well, got a very idealistic and very utopian sort of aspect to how Bitcoin could be, or how crypto could work, and how people could transfer money and it would destroy the system and whatever else. Then you sort of look at adoption and you think, well, what does the adoption look like now? I mean, no one's going to go down the shop at the moment and buy some milk with any Bitcoin, because frankly, they're all holding on to it. And the adoption we're seeing now is not we're all transacting with it. The adoption is now I'm going to get fucking rich. And so you have to bear in mind that the vast mass of people entering Bitcoin now or crypto now are not there because of an ideological point of view. They're a very pragmatic point of view, which is I can make some money. And I think that sort of we need to start to pin people who follow the ideology down a little bit harder to say, look, you realise you've talked about the utopian aspect of this, which is we can have a free transaction money and it's permissionless and all this sort of other stuff. But the thing that you're getting excited and using as proof is the fact that lots of people are getting into it to make money at the moment. Because to be completely honest with you, the aspects of crypto and Bitcoin that are the most exciting, or when it wins, is going to be incredibly unsexy. I mean, nobody sits in a bar talking about the finer aspects of the payment system once you tap your card on a WorldPay machine in a shop, because they don't. Most people don't care. And the thing is, if crypto wins, that's going to be the layer that sits underneath that we don't get excited about at all. It just becomes a part of life, and we don't even realise. And I think that's the aspect that sort of gets lost sight of in especially the activities of last week. Crypto will win when it's as unsexy as hell. And that's just the aspect of life. When I can go to the shops and buy a packet of milk or a box of milk with something out of my Bitcoin wallet, which isn't going to happen anytime soon, because frankly, the fees are too high.
Good. Then can we move to Q&A?
So you talked about the security with blockchains, and well, you gave the pros and cons of whether or not it's immutable, but not to talk about Bitcoin, but to talk about actually the underlying technology. So what is it that makes the blockchain behind Bitcoin much more secure than, for example, the other ones, one of which was attacked, as we saw several weeks ago. So if you can just talk about, from a technical perspective, what makes one more secure than the other?
So I don't know which one got attacked a few weeks ago. Which one you mean? Well, no, it wasn't really attacked. So that's like an application, if you want to, that sits on the Ethereum blockchain. So basically a wallet which got hacked. Well, not hacked. It was just a bug basically inside it. So what was it? 200 million got frozen or something like that. But it was not really related to the blockchain system itself. It was just like a sort of app sitting on it. But what makes it really different is that for a public blockchain and these proof of work systems, you really need to spend a lot of resources. So it's on purpose very expensive to change records, or even to add new records, which is also a change to the state of the database, right? Whereas in private blockchains, you don't want to have that inefficiency. And remember, the inefficiency is only there because you want it to be censorship resistant, so that nobody really can just send it or block something. Now, that's not exactly what you want in permission blockchains. So there, you don't need to have that very inefficient, expensive, thing, if you want to call it that way, what we call mining now. Now, the thing is, then you need to have different, guarantees. And what's the easiest thing to do is just like traditional legal system with contracts between participants. And so it becomes really clear if somebody cheats, well, we're going to take you to court. And in most of these business cases, it's pretty much enough for the security model, but it doesn't make it like magically immutable, because still for a certain participant, the benefits of actually cheating may be bigger than actually the cost of getting taken to court. What the outcome of that would be is, of course, something different. What version of the chain will then be the legal correct one or whatever? So that would be a very interesting question, I guess, to discuss. But yeah.
On a facetious note, there are companies that exist which actually check the code that's actually gone into the smart contracts. So for that particular case, the code was missing one word, private. So that's how it got hacked.
I just made a quick point about the technical thing. The blockchain or Bitcoin blockchain uses pretty much a standard sort of industry set of ciphers and encryption technologies and so on. I don't think it does anything different at all, except for the consensus algorithm, which is a new part. Is that true? I don't think there's anything else it does in terms of ciphers and whatsoever. So it's no stronger than the kind of TLS type layer you might have when you're browsing on your web or whatever. It uses elliptic curve technology and so on. These are all standard technologies. So it's no more stronger or better. It's not completely new. It's an assemblage of various standard cryptographic techniques and whatever. The new bit is the consensus protocol, I would say.
Which is social by nature, actually.
Right.
That's why I call them social systems and not really technical systems.
Right. So it may, so a slightly better question would be, in a distributed peer-to-peer network where there's no core organization maintaining that code, in the sense that there isn't a huge organization, who keeps all that stuff up to date? As technology advances, and in time that those cryptographic technologies become weaker. Think about DES versus AES or something of that sort. So one of the concerns is not just about technology. Who are the people and process around that who are going to make sure the Bitcoin blockchain stays secure in 10 years' time when our mobile phones can crack the kind of common technologies used? Did you want to grab that?
Yeah. Just wanted to amplify perhaps a little bit on your theme there, which is that cryptography makes things, relatively speaking, hard. It doesn't make them absolutely secure. So relatively speaking, compared with the amount of computational power that a typical processor has today, it's hard to do. And I think it's really worth emphasizing that computational power is changing. It's changing very rapidly. And in 10 years' time, it will certainly be very much more powerful. And the things that we consider to be, relatively speaking, hard, in 10 years' time, or even sooner, in fact, will be, relatively speaking, quite easy. So there is an interesting question as to how does the blockchain of whatever sort you have evolve over time, and if it is truly decentralized, who makes the decision that it's time to move on, etc., etc., etc.
I have 3 questions, please. First, if you could tell me what's backing the Bitcoin compared to fiat. And the second question...
What was the first 3 rules of this?
Okay, I can live with that one, but it's 3 quick ones. So,
are those your other...
So at the moment we have $454 billion in the cryptocurrency, which of 288 is in Bitcoin on its own. So what do you think will happen when this will grow to $1 trillion or $2 trillion?
It's another Bitcoin question.
This is Bitcoin is the is the
your
thing.
third question, which is not a Bitcoin question.
No, it is. At the moment, we have over 110,000 unconfirmed transactions with the Bitcoin, and every second, over 10,000 transactions are happening. So if it's not tradable, if it's not traceable, then how this is happening then?
Is it worth, or Michael, do you want to explain why you have unconfirmed transactions? Do you want to explain? Basically, what happens is, so it's not like Visa where maybe first come, first served. You pay and it goes through, and there's some determinism there. With this, you throw out your transaction. There's a clip attached to it, and it's up to the miners to decide which ones they incorporate into blocks. So your transaction could wait forever. Because, I had a friend, I won't mention who he is, who tried to send some money, a couple of £1,000 worth, and attached no payment at all. It went, it's probably still sitting there somewhere in the ether. So transactions aren't guaranteed to go through. It's not deterministic, and they don't go through in the order that they were originated. That's true, isn't it? So you do end up with this huge queue of transactions that just never, and no recourse, if that happens to you, no recourse to go into a central party to say, can I pull that back or reverse it or whatever.
There is.
There is?
Yeah, you can just eventually.
You can spend it again. You can spend it again, yeah, and just hope, and it sits and yeah. But you don't. If you're not, you could, but my mum couldn't. Is what I mean, So she wouldn't know where to go. I mean, it disappears from your wallet. It'll come out of the wallet, and it'll be in the ether. And unless you know what you're doing, you won't be able. You'll be like, I've lost. Where have my coins gone? So you won't necessarily see that, and you have to know how to deal with that. And most consumers wouldn't know how to do that, I don't think.
And so, no views on the $1 trillion question.
What was the $1 trillion question?
What happens when Bitcoin hits $1 trillion? I mean, it's just a more expensive conversation then, right?
Yeah, I don't know.
Hi there. I have a question. It kind of relates to what we're discussing now in the sense that it takes forever to get transactions confirmed. So the one that they keep 2 points that make the blockchain like a challenge to adopt across the board is latency and the cost, right? So, but that said, there's the new one. I don't know if you heard about IOTA, if the panel is aware of that, and what are your thoughts? Because they're claiming that they address these 2 points mainly, right? So there's no fees attached. So to send a transaction to someone, I have to validate 2 transactions. So I end up being a miner myself. And they say that it's much quicker, and while Bitcoin can process 4 transactions per second, they say they're already at 500, while Visa it's 4,000 per second ish. So, do you guys have any thoughts on that? I don't know. Do you see this has been the crypto 3.0, as people are claiming, or not?
Well, they're using a completely different system. So they claim it to be, a tangle, it's what they call it, so distribute acyclical graph, where they really just change, not really change, but it's like every single transaction is reference to, the previous one. And then you create like a graph of transactions. The thing is, they did 2 things, which weren't that good actually. So the first one is they rolled out in crypto. So they have the entire thing in ternary instead of binary, so they had to rewrite all these cryptographic hashing functions. And so I'm not a cryptographer, but like the first thing I've learned when getting into that topic is really you never write your own cryptographic functions. And that's the first thing they did. Of course, it got cracked from MIT researchers, and they reached out to them, and actually as a response they got, yeah, we know exactly that it's broken. We did it on purpose because it's open source, and if somebody copies it, they have like a broken hash function, which it's a pretty weird reasoning, but whatever. So that was the first thing. And the second one, it works pretty well right now. Well, apparently I've heard that right now it's very difficult to do transactions, but I don't know why. But it worked pretty well, like, let's say last week at least. But it works very well because there's one central coordinator who decides whether there's conflicting transaction or not, which is like the entire point of a blockchain of removing, right? So you don't have one single authority which says, oh yeah, this transaction is okay, the other one not. They claim that's part of their plan. They're still very early stages, so they will decentralize that over time. But right now, it's still a central coordinator. So it's just claims right now, to be honest, for me. But I'm happy to get proven wrong. So
yeah, just if you are going to use a system of this kind, you have to make up your mind what properties you want out of it. Okay, it's really simple. So I'm an engineer, and I say, well, what would you like? What would you like me to build? And in this case, we're going to say, well, look, I want non-repudiation, meaning that if I give you something, I can't later say, I didn't give it to him. No, why? No, I didn't give it to him, honestly. So non-repudiation is important. The completion of a transaction in a finite time, or confirmation that the transaction did not proceed in a definitive way, is another extremely important property of anything that involves money and so on. So the list kind of goes on. And I suppose historically I used to manage the development of a foreign exchange trading system that carried $2 trillion a day in foreign exchange. And that's quite a lot of money, and the frequency was extremely high. So it has to take a lot of load, as where we were talking about earlier. So it's got to have all of these properties if it is going to be the answer to everything. And of course, existing currency systems are not the answer to everything. So choose what you want it to do, and then say, does it do that? And the list of things that existing systems do is extremely long, I think, and very hard to fulfill.
Can I just reinforce that? Yeah, sure. Okay, so can I just, I was just going to, just to follow on from that, you've got several thousand altcoins, these alternative coins, which try out different types of, so you totally do have to agree what features you want. One of the changes that's really happened is we've had about 4,000 years of physical currency, which is non-programmable, a £5 note. We've now got digital currency, and you can make it do anything you want. The question to the designer is, what do I want it to do? And you only have to look across all the altcoins to realize all the different ideas people are having about how to create the currency, distribute it, and all the rest of it. So there's almost a sort of survival of the fittest, almost a sort of Darwinian experiment taking place to find out, with all these thousands of alternatives. Everyone says, oh, we're better than Bitcoin. We don't do proof of work. We do proof of X, Y, Z, and all this kind of stuff. So as a society, we really have no idea what we want, because we've had 4,000 years of a static currency, of a static physical token that doesn't change. If I give you £5, it doesn't change, it doesn't go blank. So if I give my kid a £5 note and they try and buy cigarettes, it doesn't go blank. I can't program it to do that, but I could program a virtual currency to do that. I could stop it being spent on certain items, I could track it and all the rest of it. So there is a whole new discussion, whole new world evolving around what we want currencies to do. And I don't think we really know, but I think this is a big experiment with all these millions of altcoins or thousands of altcoins to try and figure out, if we could program our currency to do whatever we wanted, what would we make it do?
I'm going to just return to the $1 trillion Bitcoin question, because I was thinking about an answer for a while there. Okay, so let's say I have a stock and I break my stock into 1 trillion pieces and I sell one of those pieces to Eddie for £1. I now have a £1 trillion market cap company. Right, there's no way that my company is worth £1 trillion. It just happens to be that Eddie was dumb enough to buy 1/trillionth of it for £1. And we sort of, the comparisons of sort of the $1 trillion, $400 billion market cap Bitcoin versus Visa or whoever else, when we see things that are far beyond the value of their inherent value in the stock market, those things are seen as bubble currencies bubble stocks, and eventually they crash back. So the thing to bear in mind is, there might be an overvaluation of Bitcoin. I'm not in a position to say it is, but the way Bitcoin is behaving, or the price of Bitcoin is behaving, represents a certain mania within the market to acquire that coin, which is actually pushing it out of the range of it actually being valued at any sensible rate. If you want to look at things from a currency point of view, look at things the way they work the other way. Now, when things were getting a little bit crazy last Thursday, think of all the things you could start to buy with the Bitcoin that you had. Now, look at the reverse of that and imagine you're in Zimbabwe or Venezuela or any other places where they're suffering from hyperinflation, and you're seeing the opposite, which is you're very quickly seeing that your loaf of bread is becoming more and more and more expensive because the value of the currency you hold is devaluing so quickly. Again, this is an example of a currency that is utterly failing. So what we're kind of seeing is not whether there's an inherent store of value of whatever Bitcoin is at the moment. It's just the behavior of the market around it is a certain type of mania. So we should be a little bit wary of assigning a particular value to what Bitcoin as a whole is worth by using terms like market cap, because it's not market cap. It's very misleading to look at it that way, because it acts in two different ways, and people kind of grab whichever one they want to attach it back to what we're talking about, to whatever the particular ideology is at that point in time. You just need to be very careful of the market behavior of it right now.
Good. Well, I think we're going to wrap it up there, and that's a great lead-in for the final thing. I asked Raul if Bitcoin was a dog, what kind of dog would it be? And do we have any guesses from the panel as to? Since he's the neutral party, it's obviously the right answer. So, do we know what that answer is? Anybody else? Do we have any?
A whippet.
Okay.
Moves very fast, very nervous, gets bad in the cold.
So we got a Great Dane earlier, which was too big and eats too much. No, the answer was a border collie, because it's very smart, it's good at herding, and then loses its mind at the age of 7. I think that was the answer. So with that, thank you very much to the panel. If we give them a round of applause.